Yes, good afternoon, everybody. So today's webinar is going to be one very good one. So far, it's just an extension of what we've been looking at previously. Some days ago, we breakout tried defining what breakout is, then mentioned exactly when breakout was supposed to be traded mostly and when to avoid breakouts. So today's webinar, we're going to look at just something that looks like that. Just that it's not the same thing, but it's called false breakout. What is a false breakout? So we'll start by first looking at that online first of all before I give my definition of the same. So second, we go straight online, then we'll see what the definition of that is. So we have this, see my screen, this is what we have. This is from Daily FX. So as you can see, we have this is what false breakout is. A false break is when price temporarily moves above or below a support or resistance levels, but then retreats back to the same as it started. That's the simplest definition, that it's a temporary move above or below a key level, a key support or resistance level, then it retreats back to the same side as it started. So as you can see, we have a picture below. So this is a resistance. Resistance is a false break, an attempt to move up, but then it comes back down. So have this as a resistance, but then it came up, then retreated down. Also have this move to the upper side before it retreats to the lower side. So this is the simplest definition based on line. My definition of that, the same, is that anytime price breaks above or below a level, but then it fails to sustain that breakout, that's called a false breakout. So that means if you have a resistance level, but then price breaks above it, and then it fails to sustain such a breakout, that is what I call a false breakout. So it's pretty much the same definition as the one which you've read from online, that anytime price temporarily breaks above a level, then retreats back to the same side where it started. It's called a false breakout. So we are just saying the same things, just using different words. In my screen, to describe it precisely, this is what I'm going to say. I want to use some diagram of this one. Did everything. Remove period separators, and I'm also going to remove the grid. The boxes you're seeing on my screen, they may not be visible, but they're called grid. So anytime you have a level, assuming you have this one here as a resistance, level 1.13251 as a very good resistance, then you have price coming towards it and then retracing to the lower side. By definition, this becomes a very good resistance. Then if price comes back again the second time, this is still a very good resistance. Yeah. Wait for price to come back again for the same place. So ordinarily, if this happens, that price goes to a level and then it does not break above, instead it pulls back to the lower side, that becomes a resistance and a very good place to sell from. Sometimes this may happen, that instead of price bouncing off over resistance, it actually breaks beyond it. Instead of price bouncing off from this resistance level here to the lower side, price rises above it. If this happens for you, that you find that price has gone above a level, instead of remaining there, that has broken above, you're supposed to look for buy positions, it again gets back to the lower side. This is what is called a false breakout. The fact that price has gone above a level but does not sustain that breakout, that's called a false breakout. So this is a bullish false breakout. There are two. We have bullish false breakout, and then you also have bearish false breakout. Bearish is the opposite of bullish. When price breaks below a support but does not sustain that breakout, that becomes a bearish false breakout. So we have this. The entire place is referred to as the false break. Yeah, it's a false breakout. So this is just one way it can happen. So if you have a support on the lower side, you have a support there, then price uses that level as support. While you can see it goes, uses it as support, then it comes back again and uses the same level as a support. Yeah? Then when it gets back the third time, breaks below, then it does not remain on the lower side as usual. So normally if price have a support, if you have a support here, then price goes below it, we expect price to remain on that side. But if that does not happen, that instead of price remaining below, it actually comes back again and breaks again on the upper side, this is called a bearish false breakout. This is called a bearish false. So this is the typical way. This is the easiest way this can be defined. This is still a false breakout. What we are explaining now, this is a false. This is a typical example of what false breakout means. You have a support and price breaks below it, but does not sustain that breakout. Instead, it comes back again above the same level we are supposed to trade from. That is called a false. So normally the correct place to trade from is first retracement to the same level after the false breakout. So if you have your chart the way I'm having mine, assuming you see this, that you had a support here, then price breaks below that support, comes back again above it. The correct and best place to trade is not the previous ones, but the first retracement after that false break. So that means we'd wait for price to get back again like this so that we can buy it from that point. This is always the safest place to buy from. If you want to trade correctly, always buy after the false breakout. If you want to get everything correctly, always buy after the false breakout. So I'm going to write that down. Sorry. Always look for trades. Look trades after the false breakouts. So this is exactly what I was trying to say. That anytime you have a level, you have a level like you have a resistance here. This is a very good place to sell from. I'm going to mark them with an this is a very good resistance and a good sell place. We also have this as a resistance and a sell place, as a resistance and a sell place. And then we have the entire place as a false break. So anytime you have this, that these are the place to sell from, then you notice that this is a false break. Price comes back down. The best place to sell from is when price comes back again to the same level. That is the correct place to look for a sell from. So if you successfully sell it here, you successfully pick a sell from this point, your stop loss must be above this for the entire false break itself. So this is always the safest place to have your stop loss. The safest place to have your stop loss. So if you sell it here, where I'm having this tick, you need to have your take profit there, and then your stop loss above the false breakout itself. So this is the highest high you've seen so far. That's where your stop loss should be. And on the lower side, if you buy it here, you're supposed to have bought it the first time, and then you're supposed also to have bought it there, and then maybe you could have bought it there if you can see memory of the same place being used as a support, but the correct place to buy from is actually at this point. So if you buy it here, your stop loss must be below. Have your stop loss below this level, and this should be dotted. have your stop loss below the entire false breakout itself or above the false breakout itself. So this is one way false breakout can happen. It may break above a resistance simply like that, or it may break below a support. That's one way. The other way is what I'm going to draw for you now. The other way is if you have a resistance, then price has successfully gone above or below a support. Then it breaks again below it, but then does not remain below it. Instead, it comes back again to the upper side. That is also a false breakout. So we have this. I'm going to delete period separators. Assuming you have this as a resistance, very good resistance, then price goes to that resistance severally and then breaks above it and then again breaks below it, but does now not remain below. Instead, it pushes back to the upper side. That's also a false breakout. So if you have something like this, that the price goes up to a resistance and it gets down, it goes back to the same place as a resistance, yeah, it goes back to the same place as a resistance, then it continues down as a resistance like this, and then it breaks above that resistance. So normally after this breakout, we expect price to maintain, to keep itself above, to remain above that level. We expect price to always remain above this resistance. This is what we expect to happen, that after breaking above a level, price should keep hold above this level. So this is true. Another way false breakout could happen, the price may go above a level, the same we've seen, then comes back to the same place, uses this as a support. So this is just to increase the number of buyers, people who are willing to buy at this point here. So the first time price comes back to a level, you don't do anything. This is just a support. So you may see this, a good place to buy from, but then price again breaks below that support, then comes back again above it. So this one here, this is still a breakout. This is a false breakout. The entire break below a level and then coming back above it, this is a false breakout. So the best you should do, if you want to trade this correctly, wait for price to get back to the same place so that you can pick a buy to the upper side. This is always the safest and the best place to look for a buy from. If you want to trade breakouts correctly, ensure you can weed this out. Wait for a false breakout, then trade after that false breakout. It's always the safest. So somebody should not tell you that you trade immediately after a breakout that you're supposed to enter trade. No. Entering trades after false breakout is extremely dangerous. So if price goes above a level, then it retraces for the first time, and then you pick a buy on the first retracement. These are the ones that we've seen would end up being the first false breakout example. So price breaks above a level, it retraces back down up to this point, and you pick a buy. Then the next thing you know, it goes to the lower side. This is a loss on a side. Instead, wait for that false breakout to complete itself, then pick a sell after that. So it may appear that waiting is difficult, but it's always the best thing to do in Forex. Waiting is always the best. Waiting for the correct setups, the best thing anyone can do. So if you want to trade correctly, be patient and wait for such things, false breakouts. Get a clear resistance. Wait for price to attempt breaking above or below that same resistance. Then pick a trade from that point. So I'm going to look at an example of this one first of all. I'm going to look at an example of this, the first way. This one, Euro GBP. Have this. Now, so as I've said, the very first thing you look at resistance, the key level first of all. Then you ensure that price has either gone above or below. So we have this one, a very good resistance at this point. Also have this. So if you are looking at this chart, the best what you could have seen is that we had a resistance here, a resistance, then price went above it. So immediately price went above this level. Possibly if you are trading a breakout, you're supposed to be looking for a buy from this point here. But if you knew very well that you cannot buy on the first retracement, even this is a retracement, somebody may say this is a retracement, it looks good, it's okay, but I won't buy just because of this. I want retracement that happens in form of candles, that after price goes above a level, it retraces. If this is red, the next candle should be red down, should be red slowly until it hits this support. But I won't buy a tail. It's okay, somebody can form a strategy based on this one alone, but it's better if you wait for real live candles, not just tails. So after price goes above, comes back, then if you bought the first retracement based on candles, this is a loss for you. But if you let this happen, you would have seen that the entire place, which is this, is actually a false break. So the best you should do is to sell immediately on the first retracement, which is this one. If you sold it here, which was yesterday, you actually had money. So this is one, the best, the safest way to trade. And if you can get a false breakout, then always enter trade after that false breakout immediately. Get a clear level, wait for price to break either above or below it. Then if it retraces back to the same place after the false breakout, then you pick a trade from that point. Have this, have another very good level here, just a support. We have that, sorry, have this, then you also have this one. The red line you're seeing on my screen is not, this is actually the ask line. Removed it already. So we have a very good support here, support, a support, a support, a support, support, a support. And there's also this as a support, as a support. So what we expect to happen now is for price to come back, to come up to this support. The very first thing is identify a very good level. This it has been used since July, since earlier this year, since 3rd of July, 2nd of July. Price has been using it as a support, a support, a support, a support, a support, support. So what we expect to happen now, if we are doing false breakout, you want price to attempt breaking below, then it should come back again above. Then if it can retrace up to the same level, then this will be the correct place to look for a trade from. So the best, what we are saying here is that if you see this, then this should be the correct place to buy from. Listen. So the entire place is a false breakout. The break you saw below this zone is actually a false breakout. It's not an actual one. Don't find yourself selling just because price has gone below a level. And don't find yourself buying just because price has gone above a level, because as I've seen here, if price has gone above a resistance, wait for confirmations that the price is continuing that direction. And if price has gone below a support, wait for confirmation that the price is continuing to the lower side. So the best is not to buy when price has gone, if a level has been used severally. If a level has been used several number of times, there are chances it may be broken. So wait for that false break, then you pick a trade after that false breakout. So we look at the next one. We look at the next example, which was this one, where price breaks above a resistance. Price goes above a resistance, remains above it temporarily, and then breaks below before continuing upwards. So we look at that. on the area that I've colored, on the area where I'm having my lines at. Have this. So if you take this place as a support here, sorry to have that there, a support, the entire place, a support, the entire place, then price goes below that support, it remains above it, then it goes down, comes back again as a resistance, then there's a break again on top, sorry, just a second here. So we have a level that price is using a support from this point, a support, then it breaks below, uses the same level as a resistance, then it gets back again above, same place. Gets above the same resistance, then remains above it before eventually breaking below. So after breaking below, the entire place, which is this, is actually a false breakout to the upper side. You're supposed to sell immediately, it gets back and it traces again to the upper side. So if you didn't sell it based on this pin bar, you actually had the chance to sell it when this happened, when it came here. So although this one ended into a loss, but it was the best place. You sell after the false breakout. So whatever I'm trying to explain here is actually an opposite of this. It's the same concept, the same everything, but it's opposite this one. If I was to look at this, just a second, if I was to apply the same thing, add a support there, so price comes back down, we find this as a good support, a support, then price continues down, uses it as a support, like this. So if price breaks below this support here, normally we expect price to remain on the lower side, but if it comes back up, assuming instead of continuing downwards it comes up, then breaks to the lower side, and then instead of remaining lower, comes back again and breaks above, but then instead of it remaining above, it breaks again to the lower side. The best you should do is to wait for price to retrace back again the second time, then you pick a sell. So some people may sell it here, which is okay. Some people may sell it here, it looks really good, but it's not as good as the person who waits and sell after the false breakout. The entire place, this protrusion, is actually tail on a higher time frame. So if you are trading, maybe you're doing 15 minutes, this could be a tail on 15 minutes, but on the lesser time frame, maybe 5 minutes or 1 minute, it's actually real candles. So you need to get this correct, that if you're doing 15 minutes and this is a tail on a lesser time frame, this could be real candles. So we don't want a case where we find this, you enter trade here, then you have your stop loss there. I mean, you buy when price breaks a level and then it shows signs of remaining below by the first retracement, not breaking above. Just know that even the break above, which this one could be a false breakout. It could be a chance that we are only trying to attract buyers to buy the opposite direction. So if price is downwards, wait for signals. This is like a Z formation. If you know what Z means, this is a Z, and it's always the best. It's a very good setup. Just a second, look at this. You have price breaking below, and then it goes up, breaks up, and then it breaks down. Again, this is a Z. This is a confirmation that we're continuing downward. So if you can get a setup like this, a Z, just know very well that we are still continuing downwards. It's a sell. We are still continuing to the lower side. And anyone who can wait for such a setup, will always get it correct. Also have this. On the other side, we have this one here. Sorry. If you find this, that price has gone above level, and then it has broken below and has gone again above it. This is a Z formation. It means price is still continuing to the upper side. We are buyers. We are still buyers. We are supposed to wait for a buy. So if you can identify such a setup on any chart, be sure to trade it. And that setup should happen around a clear level, a good support or a good resistance. And if it happens, if this is a resistance, then price breaks above, then breaks below it again, and then comes back again above it. You had better wait for price to try retracing so that you can buy it. And in that case, it is this that becomes the false breakout, and this becomes the correct place to look for a buy from. So I hope this makes some sense. This is a very simple Z formation, but it's always the best setup to look for. In any given chart, it's always the safest setup to look for. So as I mentioned in other webinars, despite what you've heard me say here, despite everything that you've read anywhere or heard from anyone online, or whoever you choose to hear it from, the most important strategy in the Forex market is risk management. That's the most important. That is the most important strategy. If you don't have a strategy that helps you manage your risks properly, don't do anything. So whichever strategy, even if I'm saying that this is like 90% accurate, that every time you see this, there's 90% chance that the price will go your way, just know that it's just 50 or less percent chance. The remaining 50 is in risk management. So if you have a very good strategy, maybe you're trading a Z formation or a false breakout formation, just know that part of the percentage, what determines your winning rate, is actually the amount of risk you are willing to put in that particular trade. So don't risk much more that it damages your account. Don't risk much more. Understand how to play around with this lot size. Understand how to use it properly. So if you have this, you have a strategy that says you're supposed to buy when Z happens. That is true, you're supposed to buy when Z happens. But then the next thing that should follow that is how much should you risk in that trade. Whichever strategy you have, each and every strategy, there has to be risk management to it. So that's the most important thing. That's basically why I keep stressing the fact that you cannot trade without a proper risk management. You can never make it if you don't have a proper risk management. So you have to learn how to control your risk first and foremost. Then after that, you can now go ahead and start looking for strategies. Every strategy must have a proper risk management. If your strategy tells you you're supposed to risk 90%, you account for 1%. That. So I know this goes against the principles of scalping, but it's always the safest. Even a good scalping must have a good risk management. That's the most important thing. So thank you very much. I hope we've learned something on today's webinar. We meet again next week at the same time, at the same place. Thank you.